you have a whole bunch of people that are standing to lose money because of carry trades, and it took down a whole stock index. Japan was once the third largest economy in the world. It is still the fourth largest economy in the world. So what happens in that country matters to the rest of the world. Japan just had its biggest stock market crash since 1987, and this has caused markets all over the world to start to tumble down. None as bad as Japan so far, but investors are starting to get worried. Now, Japan is raising interest rates, propping up the yen, and this is messing with carry trades, and it's leading to a whole bunch of market activity. So let's deep dive into it. Now, before we get started, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. Japan's Nikkei stock index dropped like it fell off of a cliff. I mean, in one day, it lost all of the gains that it had made in the previous year. Now, a lot of the things that are going on with Japan's stock market all trace back to the Japanese yen. So the yen has fell on hard times over the last couple of years. It has dropped drastically, but very recently it has been propping up and it has been doing better, and Japan has been stepping in. They've been raising interest rates recently in an attempt to try to save their currency. So within the country, there is a shift in monetary policy that is going on. Well, before this time, Japan held steady for such a long time. They did not move interest rates. They kept them. They had negative rates for a long time, zero interest rates for a long time, and this led to a lot of people doing carry trades. Now, carry trades where they would take cheap Japanese yen and they would sell it and convert it into dollars and buy assets with these dollars, and it was a good money making opportunity. There was literally thousands, millions, billions of these carry trades going on a regular basis with the Japanese yen because their rates were always about zero, and they knew that they could sell and go into other asset class, other currencies, and that it was an easy money making opportunity. And sometimes they would borrow, they would leverage more, risk more, because the yen was always very steady because Japan did not move rates for the longest of time. It was in a way, it was easy money. So a lot of people got involved in it, and we're starting to see now, easy money now with the monetary shift. It's causing a lot of issues, causing a lot of headaches, as we're seeing a stock exchange, Black Monday was, it's a legendary crash. It's one that, people still talk about today from the 80s. This would happen in Japan. To them, it is the worst one since that time. And with so many people looking to unload their carry trades at this point because the spreads aren't the same and the yen is moving, while people thought that it wasn't going to move, and it was moving down for so long, it was cheap. People holding these carry trades, they're just starting to sell them off, and it's having an effect on the markets. There's a lot of activity. It's shaking markets, it's dropping markets, and other countries, obviously started there. Other places in Asia had a rough time. Europe, the UK, all of these, the United States, and it's just kind of having this, going down the street. Everybody's starting to get affected, but a lot of it did start in Japan with the cheap yen starting to get propped up. People that were holding all of these carry trades starting to unload them, get rid of them, try to, not lose as much, or make, try to make something, salvage something. And it's leading to you have a whole bunch of people that are standing to lose money because of carry trades, and it took down a whole stock index with it. And you have to remember, Japan is a very heavily indebted country on its own, and the business, the big corporations and businesses within the country are also very heavily indebted. It's because they've had access to low rates for so long. Nothing different than what's happened in the United States and other places in the world. When interest rates are low, companies start to borrow as much as they can, really, because it's cheap to do so, and they know that if they borrow when it's cheap, they can make more money than the interest that they have to pay. Well, in Japan, this has been going on for so long, decades, much longer than it had. Well, the United States had low rates, and they've moved them up and down, and they've played with them. Japan has had them low for so long, and even now 0.25 isn't really a high interest rate or anything like that. But in a heavily indebted area where the country is heavily indebted, running high debt to GDP numbers every year, and the major companies that make up a good portion of the economy are also heavily indebted, you're kind of in a weird fiscal situation when you're trying to move monetary policy. And Japan was once the third largest economy in the world. It is still the fourth largest economy in the world. So what happens in that country matters to the rest of the world. And you're starting to see it with all these other stock exchanges that felt the after effects of that crash that was as bad as the one since 1987. You're starting to see fears around the world, and obviously, this could be a short-lived thing. It's not like, oh, this is the end and things got. This can correct itself fairly quickly, but there are a lot of carry trades out there. There's a lot of money that's on the table that can potentially be lost right now. So it's kind of a shaky time for markets, and if you see a lot of red in the meantime, just know a lot of it stems from carry trades involving the yen. People borrowing, selling into dollars, buying assets with dollars, or buying other currencies and buying assets in those currencies and making money because the yen was so cheap. Well, things are kind of starting to shift right now, which is kind of leading to some shaky times. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.